Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me today is Hormoz. Well, Hormoz, what a morning. It's a fantastic Friday, so to call it. The Nifty is off the blocks, up close to around 200 points. Keep in mind, its star performer, which is the Nifty Bank of the largest constituent, isn't performing, and yet we're at the high point of the day. Gives you a sense about the market mood as well.
It does, and considering the fact that we've been sluggish all through the week, now the index has turned positive for the week. Considering the move that we have had this morning, the Nifty is now well above the mark of 24,600 and leading the gains. As you mentioned, HDFC Bank is not performing, but what is leading the gains though is IT, and Infosys is now up almost 2.5%. The stock is at a 2-year high now. It's nearing the record high levels that it had hit in March of 2022. So it is IT that is leading the pack. Metals were a bit sluggish and they are started to contribute as well. But a lot of earnings reactions that are coming in. But before that, we get to a new listing and a new company that is listed on the show on the in bourses today. That is maize-based specialty product producer Sanstar, which has seen a good listing on the street, gains of about 14% from its issue price. We have Shreyans Chaudhary, who is the joint managing director of the company, who is joining us now to discuss about the company's post-listing strategy. Mr. Chaudhary, good morning. Thank you for joining in. Firstly, congratulations on the listing today. It's a big day for your company. But I'd like to start off by asking you, what's the moat now that you have compared to your competitors now? And can you continue your current growth momentum going forward as well into FY25?
Yeah, first of all, thank you very much. Indeed, it's a momentous day for us, and this is just the start of a new journey. So the company has grown in terms of top line at almost 50% CAGR over the last 3 financial years. Going into the expansion where the company is doubling the capacity, and that the works are already ongoing and we are well slated. So we hope to maintain the same top line growth over the next 3 financial years as well. The demand for maize-based specialty products and the plant-based products in general is robust, both domestic as well as exports, and we see good growth momentum going ahead.
Okay, hi Shreyans. Congratulations first on a solid listing. As we speak, the stock is at the high point of the day. So good on you. Now let's get to a couple of numbers. You're sounding optimistic about growth and about momentum. You've raised some of this money and you're going to be adding capacity, doubling your capacity to Dhule facility. Could you tell us, when does this capacity come on stream? Point number 1. And at optimal levels, including this capacity, what is the peak revenue potential for the company?
So with the historical experience of the promoters in terms of execution of projects timely that we've both done at the Kutch as well as the Dhule plant. So the works are already going. We are very optimistic that we will complete the expansions before June 2025. And going here, so because the capacities are doubling, we anticipate a similar jump in top line on FY25-26 numbers. At least we anticipate 70% of the capacity to kick in FY25-26 numbers.
Okay, so get to a couple of numbers then. You did around 1,100 crores last year of revenues. Now with this capacity coming on stream in June 2025, what is your revenue potential? Give us the revenue potential first, and then we'll get to the guidance for FY25 and FY26.
So because majority of the expansion is also happening on the derivatives, the second generation value added products. So we anticipate better EBITDA expansion as well going on. But just to speak on the top line, as I said, 70% of the revenue of the new incremental capacity we anticipate in 25-26. So if we were around 1,100 crores of top line in FY24, a number of, because these are higher value added products that we are making with a better revenue potential. So a revenue of 2,000 to 2,400 crores could be a possibility on FY25-26 numbers.
What about margins then, Shreyas? You did around 9.2% in FY24. Correct me if I'm wrong here. What are the factors that led to this margin improvement compared to FY23, A? And then B, do you see that scaling into double digits this financial year or maybe say in the next one?
So, because I'll enlist three levers that will be contributing to the margin growth. One would be that what I mentioned is the majority of the products coming in on the second generation derivatives and the higher value added mix. Some of the products which we are making on the expansion are also raw materials for pharmaceutical industries. Second point, of course, is the renewable investments that the company has done recently. We have already commissioned very recently the 3.5 megawatt solar farm at the Dhule plant. We have also on the process of commissioning the 1.5 megawatt biogas-based electricity. And the third is the sheer scale of size. So at 1750 tons per day post expansion, the Dhule plant will be the single largest plant in India. So all three these factors on a cumulative basis are anticipated to aid on EBITDA expansion going ahead. And the demand is robust. Our majority of the product revenue comes in from sales to food, personal care. And going ahead, we are also anticipating growth on sales to pharmaceutical industries. We clocked almost 400 crores worth of exports in FY24. The export demand is robust. Sanstar has a very good forte for its brand now in the overall export markets as well. So all these factors cumulative will aid to EBITDA expansion and margin expansion, of course, going ahead. We hope to be in the double-digit territory, and the general range that we are targeting is between 10 to 16%.
10 to 16%, that's a very wide range. Shreyans, we can't let you go at that. Give us a narrower range. 10 to 16%, the 60% deviation of there. So you go to double digits in this year, FY25 itself. You're already at more than 9%. So by the end of FY25, you'll be more than 10%?
So I've given you a range because of I mean the second generation derivatives will all be coming in by June 2025, and so it's a cumulative factors which I've enlisted. So over the next 3 years we anticipate to be within this range. The demand is good, the market is robust, and because of the capacity enhancements, we anticipate these numbers to start flowing in.
Can we take it from 10% moving towards 16%? Can we take it as that with a 3-4 year time horizon?
Yeah,
by your mix?
That would be a better positioning. So that would be a more realistic view assessment.
We appreciate you joining in, Shreyans. Thanks a lot for joining in. As you said, the facility comes on stream next year. FY26, you can do revenues of 2,000 to 2,400 crores, and margins will be in that vicinity from around 10%, gradually moving to around 16% in the next 3 years or so. Well, time to slip in a short break. On the other side, we'll be joined by the management of Welspun Living. Ms. Goenka will be joining in. Don't go anywhere. Welcome back. Let's get straight to the next management. Welspun Living reported a good quarter, strong revenue growth that was led by the home textile business. We have with us Ms. Dipali Goenka, who is the MD and CEO of Welspun Living. Good morning, Ms. Goenka, and thanks a lot for joining in. Well, congratulations on a good showing in the past quarter. My question to you is, you've grown a fair bit, but you're still guiding for only around 12% growth in the coming fiscal. And as you told us last time, you're not being conservative, you're being cautiously optimistic. Do you want to up that revenue guidance number? And the second part is on the margins. That was a little lower than what you had guided for. You hold on to that 15.5% odd for the remainder of the year?
So I think, first of all, I will still maintain being cautiously optimistic about the numbers because, the numbers look good and we are going to top them up. I can tell you that. But, the problem is the Red Sea as well. I mean, look at this quarter, what we had could have been better. Because of the Red Sea challenges that we had, we had to, refrain from, the kind of the numbers that we could have actually achieved. Now, when you talk about the margins, now let me give you a perspective here. While we talk in the absolute numbers, we are better. I maintain a number of 15 to 15.5, owing to the kind of geopolitical issues that still remain. However, When I talk about a core home textile revenue, it is up 19% with an EBITDA, with a very strong EBITDA of around 17%. When I look at the emerging businesses, which are like my advanced textile, retail, and flooring together, that's where I think we've had a little, kind of a 7%, on that growth. And, that's where we have been a little muted. Or that's where I could say the impact is there on a little bit on our margins. But I think we will overcome that as well in the Q2. That was also a little owing to the Red Sea in the flooring business as well.
Ms. Goenka, good morning. Thank you for joining in, and which was my next question to you, which was the exports. And since you mentioned the Red Sea issue, how much of it has impacted your exports business? And what's your share of the exports business currently, if you can share that as well? And what's the road ahead that you see for this business?
Our share of the export business today is around 90%, 90 to 92% as we go forward. Our domestic retail, home textile pure is around 5% right now, and a domestic flooring is another, 1%. So I think we are primarily right now export at the moment. But I think Red Sea, we are going to be, August end, we are seeing a little breather coming through. Because of, the challenges that are going to get eased out on the East Coast. West Coast is a little slow, but I think we'll overcome that as well.
So would you hope that Q2 would be slightly better than what you have seen compared to this quarter then, Ms. Goenka, when it comes to the exports business? Also, would you want to bring that 90 to 92% number down to say 80-85% and get more on the domestic side?
We are absolutely on that track, I must tell you. And domestic is a very big opportunity for us in this country. And definitely that's on track. Right now, exports takes on that big bucket of ours, and that will continue to grow as well. So I think, yes, domestic is going to be a very clear focus, because India is the opportunity that we all are looking at to build our brands here. But yes, exports is where we are right now, growing the way we are. Yeah.
Okay, all right. And you've gone ahead and done a buyback as well. It gives you a sense about the confidence you have in the business. But a final question before we let you go. There's been a bit of an uptake in the net debt number. So could you give us a guidance on that front? And I think by FY26, you were aiming to be debt-free. That target's on track?
We are absolutely on track on that. The net debt actually is again owing to the working capital that we basically, had to, because owing to the inventory which we had to hold up because of the Red Sea, and the next season. The next quarter is going to be a season for promos and holding on inventory for the kind of opportunity that we have. In our manufacturing is where it was. So it's all owing to the inventory that we are holding right now. So working capital will be on track as we go forward. Net debt is on track. Absolutely confident on the way we are going.
So net debt free by FY26?
Absolutely.
Okay, all right. Appreciated you joining in, Ms. Goenka. Wishing you a good day ahead, and we look forward to chatting up with you at the end of the next quarter's numbers.
Let's do that.
Thanks for that. Well, time to slip into a short break. You come back, we continue to focus on markets and on stock-specific action. Don't go anywhere.
Back with us here on Chartbusters. The Nifty is back above 24,600, nearing the highest point of the day. The index has turned positive for the week, and this despite the underperformance of the Nifty Bank, which has continued all through the week. And that is also because of the lack of performance coming in from HDFC Bank, 0.3% lower on the Nifty Bank. And also pull up Vedanta. That stock is up almost 3% at the highest point of the day. Remember, the board meets today to consider the second dividend announcement today. So we'll keep an eye out on Vedanta as well. 3.1% higher at 444. But with that, it's a wrap on this edition of Chartbusters. From Nigel, me and the team that put this show together, thank you so much for watching. Trading Hour takes the action forward.